Well, let's take a look at what drove the local equity market today. Deryk Janse van Rensburg, Portfolio Manager at Nedgroup Private Wealth Stockbrokers, joining me at the desk. Deryk, good as always to have you with us.
Thanks,
I mean, what's sentiment like in the market? What are volumes like? Have they tapered off yet or not quite yet as we're in December?
Look, I think that volumes are starting to taper off as we move towards the end of this week. And I think that where the market is, it's sitting at quite a lofty level. It's actually been quite a good return for equities this year, and I think it's taken a lot of investors by surprise seeing the market make new highs as we move in towards the end of this year. My feeling is that there is still quite a lot of risk on the table with the physical cliff around the corner, and some risk.
The fiscal cliff.
Yeah. So
couldn't even get that out myself.
So look, I still think that there's still a lot of risks in the market, and there could be some short-term profit taking.
Yeah.
But that said, I think that any weakness you need to buy into this market, and if you're invested in equities, you've got to stay invested and use the weakness as an opportunity to get in, and hopefully this market can start to make further highs next year.
One of the stocks that has really shone recently is Bidvest. I mean, it's sitting at 215 Rand today. It's up 2%. What's the outlook for the company? It's been making small acquisitions, amalgamated appliances it wants to buy out. It also bought, looking at Brand Corp. Did you like Bidvest? I mean, it seemed could be kind of those steady upward chuggers.
Yes, and like, if you just look at the portfolio of Bidvest, I still think although the acquisitions that they've made recently, Brand Corp and amalgamated appliances, I think that although they're very small relative to the size of Bidvest, I still think you could potentially see some nice acquisitive growth in Bidvest as we kick off 2013. So, you know, sitting on a PE of around 13, you just look at the chart of it, it's starting to make new highs, and it does look like it wants to move into sort of a new range of trading. So I think, again, you know, the weakness in that space needs to be bought and be patient. You know, one argues in a company like that, what do you do when Joffy leaves the business? Mm-hmm. But, you know, at the end of the day, he's been very, very smart in the acquisitions that he's done and the way that he's grown the business. They're very cash flow positive businesses, a lot of cash piles sitting on a lot of these businesses. And if he does leave, then you could see the potential of unbundling taking place within a stock like that, and that could be quite a nice value proposition for long-term investment holders there.
We certainly have seen confidence and kind of nod of confidence coming through from the market for the latest corporate action, corporate activity there. On the gold front, AngloGold Ashanti, one of the credit rating agencies, saying they like what they're doing right now when it comes to geographic diversification, keeping its investment grade there. Nod of confidence for one of the gold miners.
Yeah, and I think that's been a big question for these gold miners. You saw the information translate from Gold Fields in terms of the potential of unbundling some of their South African assets. And there was a big overhang and a question mark as to what are the other resource companies out there specifically in South Africa going to do. So I think a vote of confidence for AngloGold, and I think that they've realized that you definitely have to spread your risk by looking outside the borders of South Africa for growth at this point in time. What we must remember is that in the South African-based assets of all these gold companies, they're very expensive mines to run, and they run at very deep levels. So the ability to move from profitability into loss is huge, and that causes a high beta in the stock. So, you know, in my opinion, I still don't like gold stocks. But
I mean, you know, AngloGold Ashanti rather has really been on quite a drive to diversify away from South Africa. They've got Tropicana in Australia that's going to come online. They've also got Kibali in the DRC, and that's going to come online within a year or so, and you're going to see that kind of revenue line ticking up as a result of that. It's still not a good value proposition there.
Well, let's look at it, Sam. I mean, if you just look at the factors that can swing a share price like this, you've obviously got the gold price. The gold price moves up 1% or 2%. And the gold share starts to move. Mm-hmm. We've seen the rand dollar move out to the levels sitting at around 8.67. You know, I think it touched around 9 earlier a couple weeks back. So that's also played in the favor of these gold stocks, as well as the gold price sitting static where it is, but the share price is actually retraced in value. So there's a lot of fundamentals around these gold companies that can cause, you know, profitability to be really robust or to break even or to move into loss. Yeah. So for me, there's just too many exogenous factors that can, sway the profitability in these businesses. So look, I think it's a vote of confidence for the company. I think they're moving in the right direction, but they definitely need to hold on to a weaker rand like we're doing, and we need to see that gold price move towards that $2,000 level mark for it to really make some nice money.
Sanlam also gaining today in the insurance space and saying it's now concluded the buyout of 49% of Pacific and Orient Insurance in Malaysia, 760 million rand, and this is an interesting company because it specializes in motorcycle insurance.
Yeah, and I think just reading into that, what you need to understand is that I think it's 1 in 3 of the population there own a motorcycle. So it's definitely targeting a mass portion of the population. I think it's a very interesting acquisition. And just reading into that statement, I think what you need to be cognizant of is that they're doing this acquisition to learn and understand a lot more of the economical dynamics that take place in Malaysia. So I think that it's a step in the right direction. We all know that there's a lot of growth stemming from the East at this point in time. And if the developed world starts to come online with the Eurozone starting to fix itself, as well as America, the East is going to be a big driver in the global growth perspective. So I think that they're setting up a good foundation for some good growth, and it's an interesting acquisition. I think it sets the tone and the table for them to look at more acquisitive things thereafter, but maybe 2 years down the line, but a nice step in the right direction for Sanlam.
Yeah, I mean, Sanlam is emerging markets chief and saying in no uncertain terms this is the footprint which they were going to use to expand further in that region. What do you make of kind of all the moving parts of Sanlam right now and what that means for the outlook for the share price, 42 Rand, as I said today?
Look, I think if you just look at the portfolio of Sanlam, I think that they've got quite a nice diverse spread of revenue line items that contribute to the bottom line in that business. And I think that it's really, again, reiterating what I said earlier, setting a foundation for some good growth. So I still think that Sanlam is a great proposition. It's run quite hard, and I think that if you start to see any weakness in it, you've got to stay invested in it. And I think, again, it's going to be a function of the global economy. As soon as you start to see the Eurozone fix itself, America, and you start to see GDP in the East start to tick up somewhat and maybe potentially move back into those double figures, this is going to be a big benefit, and you're going to see some good growth out of a stock like that.
And before I let you go, one stock filler for 2012.
Look, I think I'm going to take a little bit of an adverse view to what you've seen in the market, and typically you've seen industrials lead the market higher. And I think you can start to dabble a little bit in the resource space and look at something like a Billiton. And I think that the diversification of the portfolio will give you a nice lower beta than some of the others. So I like that, and I think if you've got those, you want to stay invested there.
There we go, Billiton, the stock Christmas stocking filler for 2012. Deryk Janse van Rensburg, portfolio manager at Nedgroup Private Wealth Stockbrokers.